What's shaking in the world of digital assets? We're diving deep into the stories that matter, the moves that are making waves, and the insights you absolutely need to stay ahead. Get ready, because the news cycle is moving at lightning speed, and you're about to get the inside scoop on the developments that could shape the future. We've got a packed show today, so buckle up for a high-octane rundown that you won't want to miss. From strategic market entries to major financial maneuvers, we're breaking it all down. Let's get into it. First up, we're exploring a fascinating strategic entry point into Europe's booming Bitcoin Treasury market. What does this move signify for the broader landscape, and how could it impact investment strategies across the continent? We'll unpack the details and give you the lowdown. Then, we're shifting gears to analyze a critical decision facing a major player in the digital mining space. Is it a hold moment for American Bitcoin's reverse takeover? We'll dissect the situation, weighing the potential risks and rewards. Next, we're looking ahead to 2025 and dissecting the intricate dance of risks and rewards inherent in Bitcoin Treasury strategies. What does the future hold for companies holding significant Bitcoin reserves? And finally, we're diving into a massive Bitcoin transfer made by a leading digital asset company. What can this significant movement of funds tell us about institutional confidence and the evolving strategies within the crypto ecosystem? We're getting into the nitty-gritty, so stay locked in. Don't go anywhere, and make sure to hit that subscribe button and ring the notification bell so you never miss an update. Let's go. Europe's Bitcoin Treasury market sees strategic entry. This development is crucial, as it signals a significant shift in how institutions are positioning themselves within the rapidly expanding European digital asset space. The European continent is increasingly becoming a focal point for institutional adoption of Bitcoin, and this latest strategic move by Amdax presents a compelling case study. Amdax is reportedly evaluating its AMBTS as a key entry point into this burgeoning market, a decision that could have ripple effects across the investment landscape. The AMBTS, while not explicitly detailed in terms of its exact function within this context, is being positioned as a strategic vehicle for accessing and participating in Europe's growing Bitcoin Treasury market. This market, characterized by a rising number of corporations and financial institutions allocating portions of their reserves to Bitcoin, represents a significant new frontier for digital asset investment. The rationale behind such a move often stems from a desire to diversify holdings, hedge against inflation, and capitalize on the potential for significant returns that Bitcoin has historically offered. For Europe, this trend indicates a growing maturity and acceptance of Bitcoin as a legitimate asset class, moving beyond speculative interest to become a component of sophisticated treasury management. The strategic evaluation by Amdax suggests a proactive approach to understanding and leveraging the unique opportunities presented by this European expansion. It implies a careful assessment of regulatory frameworks, market liquidity, and the overall demand from institutional players seeking exposure to Bitcoin. The success of such an entry point could pave the way for further innovation and the development of more specialized financial products and services tailored to the European market's specific needs and regulatory environment. This move is not just about one company's strategy. It's indicative of a broader trend where established financial entities are actively seeking well-defined pathways to engage with Bitcoin in a regulated and strategic manner. The implications extend to how corporate treasuries in Europe will manage their digital assets, potentially influencing best practices in custody, risk management, and asset allocation. As more companies look to integrate Bitcoin into their financial strategies, the AMBTS, or similar instruments, could become vital tools for navigating this evolving economic landscape, marking a significant milestone in Bitcoin's integration into mainstream finance. This move is generating considerable buzz, with many anticipating it could unlock new avenues for institutional capital flow into the European Bitcoin market. Now, as we digest this significant strategic play in Europe, we turn our attention to a crucial decision facing a major player in the digital mining sector. What does the future hold for American Bitcoin's reverse takeover? Gryphon Digital Mining faces key decision on takeover. This situation is pivotal for Gryphon Digital Mining, as it navigates a critical juncture that could redefine its operational future and market position. Gryphon Digital Mining, Inc., a company firmly planted in the pure-play cryptocurrency mining sector with a specific focus on Bitcoin, is at a crossroads regarding a potential reverse takeover of American Bitcoin. The Nasdaq-listed entity, known for generating revenue by directing the hash rate of its advanced ASIC mining machines to various mining pools, is currently evaluating the strategic implications of this proposed transaction. The core of the matter lies in whether Gryphon should proceed with this acquisition or maintain its current independent trajectory. Such decisions in the mining industry are complex, often influenced by a confluence of factors including the current market conditions for Bitcoin, the operational efficiency and technological capabilities of both companies, the prevailing regulatory environment, and the overall financial health and outlook for the cryptocurrency sector. A reverse takeover, in essence, is a method by which a private company can become publicly traded by acquiring a publicly listed shell company. In this context, it suggests that American Bitcoin might be seeking to leverage Gryphon's public listing to achieve its own strategic objectives, perhaps related to expansion, capital raising, or market access. For Gryphon, the decision to hold or proceed hinges on a thorough risk-reward analysis. Holding might mean preserving capital, avoiding potential integration challenges, and continuing with its established business model. However, it could also mean foregoing a potentially significant growth opportunity or succumbing to competitive pressures. Proceeding with the takeover, on the other hand, could offer synergistic benefits, economies of scale, enhanced market presence, and access to new technologies or operational efficiencies. Yet, it also carries inherent risks, including the possibility of overpaying, facing unforeseen integration issues, or taking on liabilities that could impact Gryphon's financial stability. Analysts and investors will be closely watching how Gryphon's management team weighs these factors, as the outcome will undoubtedly shape the company's future and its standing within the competitive Bitcoin mining landscape. The hold recommendation, as suggested, implies a cautious approach, perhaps indicating that the terms of the deal or the current market dynamics do not yet present a sufficiently compelling case for Gryphon to commit to the acquisition. This careful deliberation is crucial for ensuring long-term value creation and sustainable growth in the volatile yet promising digital asset mining industry. The market is keenly observing Gryphon's strategic deliberations, anticipating a move that could significantly alter its competitive standing. With Gryphon Digital Mining at a pivotal decision point, our focus now shifts to the broader horizon of 2025 and the evolving strategies surrounding Bitcoin treasuries. Navigating the Bitcoin treasury landscape in 2025. This foresight into 2025's treasury strategies is critical for businesses and investors looking to optimize their digital asset holdings amid evolving market dynamics. As we project forward to 2025, the landscape of Bitcoin treasury strategies is poised for significant evolution, presenting both substantial rewards and intricate risks for corporations and financial institutions. The fundamental question remains: how will entities best manage and leverage their Bitcoin reserves in the coming years? This involves a multifaceted approach, encompassing not only the allocation and management of Bitcoin as a corporate asset, but also the strategic deployment of these holdings to generate yield, hedge against economic uncertainties, and potentially fund future growth initiatives. One of the primary rewards lies in Bitcoin's potential for capital appreciation. As institutional adoption continues to grow and the digital asset ecosystem matures, the demand for Bitcoin is expected to increase, potentially driving its price higher. Companies that strategically hold Bitcoin on their balance sheets could benefit significantly from this appreciation. Furthermore, Bitcoin can serve as an effective hedge against inflation and currency devaluation, particularly in economies experiencing monetary instability. Its decentralized nature and fixed supply cap offer a perceived store of value that can protect purchasing power. However, the risks are equally pronounced. Bitcoin's inherent volatility remains a significant concern. Sharp price fluctuations can lead to substantial unrealized losses, impacting a company's financial statements and potentially triggering margin calls if leverage is involved. Effective risk management, including the use of sophisticated hedging instruments and conservative allocation strategies, will be paramount. Another critical aspect is regulatory uncertainty. While regulatory frameworks are becoming clearer in many jurisdictions, the potential for new regulations or changes to existing ones could impact the value and usability of Bitcoin holdings. Companies must remain agile and compliant with evolving legal requirements. Moreover, the operational complexities of managing digital assets, including secure custody, accounting, and tax implications, require specialized expertise and robust infrastructure. The decision to hold Bitcoin on a treasury often necessitates significant investment in these areas. Looking ahead, we may see the emergence of more sophisticated treasury management solutions, including yield-generating strategies using Bitcoin, such as lending or providing liquidity in decentralized finance protocols, albeit with associated risks. The integration of Bitcoin into corporate treasuries is no longer a fringe concept, but a strategic consideration that demands careful planning, rigorous risk assessment, and a clear understanding of both the potential upside and the inherent downsides. The strategies employed in 2025 will likely reflect a more mature and integrated approach to digital asset management within traditional finance. The anticipation for these future strategies highlights the increasing integration of digital assets into mainstream financial planning. Having explored the strategic outlook for Bitcoin treasuries, our attention now pivots to a tangible, significant move made by a major digital asset player. What can we learn from Galaxy Digital's massive Bitcoin transfer? Galaxy Digital's massive Bitcoin transfer sparks institutional confidence debate. This substantial movement of Bitcoin signals a potential shift in institutional sentiment and strategic asset allocation within the digital currency space. Galaxy Digital, a prominent firm in the digital asset ecosystem, recently executed a significant transfer of 1,506 Bitcoin, valued at approximately $163.5 million at the time of the transaction. This substantial move was directed to a newly created wallet, labeled 3FPTXQ, and occurred just prior to heightened public scrutiny, a timing that suggests a deliberate strategy rather than a routine operation. While Galaxy Digital has maintained a public silence regarding the specifics of this transfer, the creation of a dedicated wallet to house such a considerable amount of Bitcoin strongly indicates that institutional players may be preparing for substantial future activities or investments within the cryptocurrency market. Such a move can be interpreted as a vote of confidence in Bitcoin's long-term value proposition and its growing role in institutional portfolios. The implications of this transfer extend beyond Galaxy Digital itself, potentially influencing a broader array of stakeholders and market participants. For fintech startups in Asia, this event could signal a coming boom. As more established institutions like Galaxy Digital demonstrate confidence and engage more deeply with cryptocurrencies, the demand for innovative fintech solutions in the region is likely to surge. This increased demand could translate into greater investment, user adoption, and the development of new blockchain-based financial products, potentially ushering in a new era of growth for these companies. Furthermore, the activity in newly established wallets, exemplified by Galaxy's transfer, could signify a critical evolution in how decentralized organizations, or DAOs, manage their treasuries. These new wallets might be equipped with advanced custody solutions, enhancing security protocols and promoting decentralized governance structures. Such advancements could bolster operational efficiency through automation of routine tasks and faster payment processing, while also enabling better diversification of holdings to mitigate market volatility. For European small and medium-sized enterprises, SMEs, that are crypto-friendly, this large transfer might have a considerable impact on decision-making processes for chief operating officers and chief financial officers. The inherent volatility of Bitcoin necessitates robust risk management strategies, as significant transfers can rapidly alter a company's asset valuation. Additionally, navigating the evolving European regulatory framework presents its own set of compliance challenges that SMEs must address. Crypto executives, particularly those in regions like the UAE, can glean important lessons from Galaxy's wallet activity. The company's demonstrated commitment to regulatory compliance serves as a model for operating within legal frameworks while fostering innovation. The operational efficiency derived from a unified technology platform offers insights into effective digital asset management. Ultimately, the transfer underscores the importance of maintaining stringent security and risk management practices to ensure regulatory acceptance and asset protection. This move by Galaxy Digital is being closely watched, with many seeing it as a potential indicator of strengthening institutional adoption and strategic financial planning. As we wrap up today's deep dives, let's quickly recap the key takeaways from these major developments. Stay tuned for the full rundown. And that's a wrap on today's essential updates. We saw a strategic entry into Europe's Bitcoin Treasury market. Gryphon Digital Mining is holding firm on a key takeover decision. We analyzed the risks and rewards of Bitcoin Treasury strategies for 2025, and Galaxy Digital made a massive Bitcoin transfer that has everyone talking. Don't forget to hit that like button if you found this valuable, subscribe for more market-moving news, and ring that notification bell so you're always in the loop. Follow us on all social platforms for real-time updates and join the conversation in our community. We'll see you on the next one.